Good morning. Hey, good morning. Hey, good morning. How are you guys doing? Welcome back to the Everyday Growth Advisors live stream that's held every Monday, Wednesday, Friday. We break the markets down for you so you don't need to do it. I hope you guys are ready with some coffee and your bagels so that we don't need no breakfast no more. We will be chilling on the floor. Okay, that was my really bad attempt at rapping, but you can see I'm pretty entertaining that way. I hope you guys are having a great Monday. Welcome back to the live stream. Appreciate you taking your time out to being here. And we have another week of mayhem, right? Markets going whipsaw back and forth. Let me just make sure. Yeah, we have settings out right. Want to make sure all the live stream settings are good. See a couple more people streaming in here. Remember, I only ask for one thing when you come to this live stream. It's smash that like button. Because when you smash the like button, that makes me all kind of feels. And I appreciate you. So, let's break this market down and get the juju going. I already see a couple of smart people started putting out their tickers because you heard me say on Friday that the number of tickers are starting to get too much. So if your ticker is up in the front, there's a higher chance for it to be covered. So I am glad that you guys are participating and I appreciate each and every one of you being here. All right, let's get it down. Let's look at the news. The news is now officially bearish again. Now, I don't know what is this thing, but you know what we say. When the news is getting bearish, we are getting bullish, right? But the market is selling off, so we are in a kind of, we don't know what to do, right? Well, the good news is that the news is bearish, right? And we know that when the market's cycling bad news, the market tends to rip higher. The reason because is that there is a higher sentiment for people to enter puts. And we can see, let's use our trusty stock bot from the option swing platform. Just go exclamation point OI SPY. And we can look at the open interest for all contracts for the S&P 500 for this week. Now, if you look at it for this week, we are once again 69% in puts, right? And let's see, today is the 15th, and we have a 59% on puts, and day after tomorrow, Wednesday, we're also skewed towards puts, right? So what do you think the market makers will start to do, or what do you think institutions will do? Remember, the power of these contracts are held by the people who own the underlying stocks. Which means to say, the power of these contracts do not lie with the people who hold the contracts. The power lies with the people who own the underlying assets that control those contracts, right? So, who owns a lot of SPY? Ding, ding, ding. Institutions and banks and all other people, like people from Robinhood and people from retail. Well, that's a very small percentage, but you know, institutions are the biggest holder of SPY. Hence, you have to remember that when institutions are holding the biggest percentage, we know that they can manipulate the price to get what they want. And if there are a big portion of people betting on SPY to go down, then we can expect the market to melt up again. Now, this goes hand in hand with my analysis last week. I did mention that since we have barely been opening up for phase 2 of the coronavirus, I can safely say that not many businesses have been online to cause a detrimental effect on the economy. So hence, I would be more inclined to be bullish than bearish on this outcome here. Although, there are some technicals that point to a further downside. So let's go through the news real quick and see what's going on. There is news that, the futures have fallen and treasuries are on the rise. So people are rushing towards bonds, right? You can see that right there. People rushing towards bonds and virus fears coming back up, right? Now, it may not be a bad idea to buy some hedges, but I don't like the price of hedges right now because everybody is in hedges. And so if everybody's in hedges, then hedges are too expensive, right? So I don't like the price of hedges. What I do like is investing in alternative investments, right? Now, many people only know US equities, but there are so many other things you can invest in. Okay, so I'm going to come around to that in a little bit. I don't want to skip ahead of the live stream. You know, we have a flow. I don't like to disrupt it. So let's get done with things one by one. And then hopefully by the next 25 minutes or 20 minutes, we can get to the tickers and do that for a good 30 minutes so that we can get all of your answers settled. Cool. Let's see if anybody's posting anything here. Good morning, everybody. How are y'all doing? Welcome into the live stream. Make sure you smash that like button and hit subscribe, because that's the only two things that I would like from you if you're here. All right, cool. So the news is starting to cycle bearishness once again. And we can see this. The first COVID vaccines may not prevent COVID infection. We have EU challenges China trade expansion with landmark tariff. And then China's slow recovery points to hard roadblock back for global economy, right? So lots of bearishness, and also then you have one piece of bullishness from Morgan Stanley economists saying that analysts are starting to double down on a V-shaped recovery for a global recovery, which is interesting. So analysts at Morgan Stanley obviously know something that we don't. Apart from that, let's see. Putin's kind of sad because he planned on selling some bonds, and then there was an oil spill, and now he can't. Right? They were green bonds, so things with green initiative. And yeah, okay, that's Bloomberg. Let's have a look at the Wall Street Journal. And so it says here that global stocks slide on fears over fresh virus outbreaks. Remember, when we're reading news headlines, we are not reading the news for the news. We're reading it for entertainment purpose, number one. And number two, it's to gauge whether we are bullish or bearish so that we can know if this is going to be a continued rally downward or a continued rally upward, okay? So just got to look at what's happening there, okay? We also have something about an espionage, and then BP taking a $17 billion write-down, right? That's another part of the news. Great. Sorry, I think my computer froze up there a second. Okay, great. We're back. So let's have a look here. The world's best performing big lender, Deutsche Bank. Okay, nothing else on the Wall Street Journal here. Let's look at the pre-market movers and have a look at what's moving here. Hertz down big time, and I was telling you guys last week that I don't know why people are buying that stock, but there's a chance that it could be absorbed or it could be bought up. It was in a short squeeze, and we were thinking that it might go up further. Airline stocks once again getting hit, right? There was a temporary relief on them, and now we're going to see again some down movement on them. Very interesting move here was Shopify up pre-market. Shopify up pre-market here with pretty much almost $30 or $40. It's a crazy move on announcements that Shopify is partnering with Walmart, joining forces on Shopify. So that's in big news. The funny thing is I actually played this last week and was hoping that it would be a play that I could make. I ended up closing the position down for 30%. Now, you can't win all of every trade. So I was following the options flow on this contract that was way out the money. And, it was basically a trade that I thought was going to pay dividends by Friday, but then the expiry was this week. And so it actually ended up paying if I would have held. And so, you can't win everything. I just wanted to put it out there that, even the fact that I had thought that it would happen, it was, in the end, something that I had to cut my losses on. So keep that in mind. Not always can you win every single time. That is the real way of the stock market, right? You can't win every single time. It's a win or a lose. Now, on the economic calendar today, we have a FOMC member, Kaplan, speaking, and then another FOMC member speaking. Let's see, manufacturing index is already out. That was better than usual. And then a 6 months and 3 months auction bill. We'll see if there's a risk appetite for bonds today later on at 11:30. And yeah, apart from that, nothing else interesting here. Cool. Great. So one thing that I do want to go through now is the SPY technical update. Let's get that out of the way. We have been looking at SPY for a while now. from a V-shaped recovery, right? We had down and then a series of impulsive and corrective waves. Impulsive wave here, and now we have a corrective wave, which is what I've been warning about for a long time, that hedge your positions here, hedge your positions here, hedge your positions here. Last week, we got paid big time with this drop down to this level here. I did say 61.8 would be the next level to test. If for some reason we break this level today, we will be heading down to the 50 and 100 retracement of the Fibonacci, which is going to be way below down. So watch for that happening. However, I do think this is a very strong level for a bounce support. Possibly that we will see a up movement here before another down. If that is the case, the bullish strikes for this would be to aim for a retracement up to the 50 moving average Fibonacci or the 38.2, which are both here after this bounce that has occurred. Now, the bearish scenario would be the bounce up here, followed by another extension down, which would be another impulsive wave down to the 50 and 100 Fibonacci. So, is it a good time to hedge now? Absolutely not. And that's the thing I'm trying to explain to you guys at the start, right? If you want to hedge your portfolio, you should wait for a corrective wave upward and then enter your hedges here, right? Remember what I was telling you guys. If you have a uptrend, right, you never buy here, you always buy here, right? So the same way on a downtrend, it works the exact same way, right? If you have this downtrend and you missed the first one and then it went down again, well, you don't hedge here, right? You hedge here. So wait for the corrective wave, okay? And then you can catch this next down wave down, okay? So keep that in mind. If you were to buy the hedge here, where we are, well, roughly here, which is where we are, it would be, you would be overpaying for premiums, okay? So don't do that. Wait for the retracement. There will be some kind of a relief rally at some point. Wait for that and then buy your hedges if you are bearish. Now, if you're like me and you feel like, you know, this market has, this correction was a nominal correction. I personally feel like this correction was a nominal correction after a overheating of, you know, kind of an irrational exuberance period. If you guys haven't listened to that podcast about irrational exuberance, make sure that you go check out that podcast. I am actually baffled that not many people have checked it out. This podcast is easily one of the most important podcasts that you need to listen to, guys. Go listen to this podcast with Mike Moss on irrational exuberance. It is a must listen for people who are new people in the trading. If you're new in trading, go listen to it. Okay, please do yourself a favor. All right, great. So those are the bullish and bearish outcomes here. I do see a bounce on SPY for temporary relief. And so I will be looking for this to accumulate some momentum up here. Now, I know I may be overly bullish, but it's for good reason. As I've said, if this market was if there was indeed a second wave of coronavirus, it wouldn't affect the economy as it has like during the first period, right? Most businesses are already closed, and them being closed for a longer period of time will surely affect their business long term. But remember that the businesses that were not able to sustain those closes are probably all X out of the market already, right? If you don't have operating expenses to survive for 3 to 4 months, there's no way that you will survive for the next 8 months, right? If you couldn't make it for 4 months, then you couldn't make it for 8 months. That's my logic in this, right? So I know it's a little, irrational to think that way, but you got to think of it realistically. Say you're a business owner, right? And you had expenses padded up for about 4 to 5 months of survival, right? Well, you're shit out of luck now because you're going to have to close down anyway. Now, is that going to affect the economy in a more detrimental way now that we're in wave 2? Absolutely not, because the same thing applies. Your restaurant's still closed, and it doesn't mean that you were going to bounce back anyway. So I think this applies for about 50% of the economy, right? Majority of the businesses that were there, like I know many shops that have closed down, right? And so if they did, then, there is no real reason for this wave 2 to affect our economy in a more rash manner. Now, if there's something else that pops out of the weeds, like another event that we can't project or we can't think of, then yeah, sure, right? But remember, the more bearish the news gets, the more bullish the market's going to get, okay? And we will reassess this on Wednesday to see where we are. But I think that there is a higher possibility that this would be a bounce up to at least the 38.2 or 50 Fibonacci. Okay, so that's where I am with SPY and the technical update. I want to go through something else that I had actually put out in the start of the year for option swing and people who were part of the option swing community. Now, many people don't know this, but I actually did a market outlook at the start of the year. Okay, this was done on January 23rd, 2020, and I did a deep analysis on the US equities and Chinese equities because I was heavily invested in China at that point, right? And I still hold about 30% of my portfolio in China for long-term investments, companies such as Tencent, Baba, with really great economic moats. Okay, obviously you don't want to invest in companies that are overly reliant on China's economy at the moment. But remember that tech companies in China are a great way to leverage on that economy. And as their population grows, it is one of the best ways to invest in a emerging market or a market that's growing at a fast pace. Okay, so we did talk about how the US was entering an 11th year of economic expansion. This is back in January, so I didn't know nothing about what's going on. I just want to go through with you what I was projecting, and obviously after this coronavirus hit and things over here would not be as expected, right? But we did cover a couple of things that I feel like I should show you guys, right? So the Fed was expected to issue further rate cuts in a bid to provide additional liquidity to markets following global quantitative easing. Now, this was a summary that came true, right? I didn't know that they would do it at that point, but they did, right? And then estimated earning growth for SPX, which is SPY, was at 9.6%, above the 10-year average of 9.1. Now, if SPY for some reason spikes towards the end of the year, we may still be on target to hit this, okay? Now, sectors to watch for double-digit growth underperforming last year were energy, industrials, and materials, which are still underperforming this year. Okay, so remember that these are actually the sectors to be going long as these companies continue to sell off. Okay, and since this is an election year, it tends to be favorable for markets historically. Statistically proven, election years are better for markets than not. Okay. And of course, we have China's economy, which was expecting slowing growth, which has happened, right? And rising corporate debt levels, the same as U.S. businesses, right? And I also said a trade war can resume anytime, this is a very normal assumption, right? And then the Chinese government has signaled the use of fiscal and monetary policies to stimulate the economy, which they have. And then the big one, where MSCI, Morgan Stanley Capital Investments, owns the rights to A shares into emerging market indexes. So majority of institutional investors have been entering these markets for almost 2 years now. Hence, the Chinese market has been on the rise. Okay, so people who are buying into the MSCI ETFs, they don't even know that they're actually buying Chinese stocks, right? So remember, China has invested heavily in secular trends which will drive innovation and technology into the next decade. It's so funny because the logo of Everyday Growth Advisors here is the old one. Now I have a new logo. So this report is actually pretty old. It's January. How crazy how things have changed, right? Okay. So SPX is now fairly overvalued. This is what we had, and this is right before the drop, right? At a reasonable pre-crisis level, as seen, all tech companies are now fully valued and should be cautioned upon. However, Amazon, Google, and Facebook remain below intrinsic valuation and may see inflows if earning reports please stakeholders this quarter. Now, this is funny because all three companies are up big time by this time of the year. Okay, buying the dips on this uptrend will pay off in the long run as markets tend to go higher and higher highs and higher lows. All right, great. So possible events for triggers, I did say, trade war related news, and then U.S. elections, right? There was also something that a correction of 5 to 10% will be nominal for a continued run to the upside this year. Watch for signs of risk shifting towards safe havens, lower duration bonds, gold, and Bitcoin, with a possible sell-off in crude. Boy, did I pull out the crystal ball with that one, right? And it was simple because, there was certain economic things that were pointing towards it. Hence, I wrote it in the report, right? And then this was the valuation for the Chinese markets. Now, with the secular trends that we were supposed to keep track of for both US and Chinese markets, the reason why I'm going through these is because I want to make sure that we go through this at the half point of the year, and then we can check back on this at the end of the year to see whether this report was able to give us any foresight based on the research that I had done. Okay. Now these sectors will see big growth this year. AI, Baba, Baidu, Tencent, Amazon, right? Big time. Health technology, Apple, XBI, which is the ETF. Financial technology, PayPal, Square, Shopify, Amazon, big time growth, right? Cloud computing, Microsoft, Amazon, Baba, Baidu, and 5G technology, Baba, Microsoft, Nvidia, Apple, right? And then the US defense budget also increased due to geopolitical risk. And so the Pentagon's budget has increased by about $23 billion. Now, the companies that stand to benefit from that is the ITA, the Dow Jones Aerospace and Defense ETF, Lockheed Martin, General Dynamics, Boeing, which suffered from a big time fall, and then NOC, which is Northrop Grumman. So keep your eyes on these, okay? I just wanted to go through this report so that you guys can be well aware of the different things that we can be embarking on this year, okay? Remember, if you're here for the first time, make sure you hit subscribe and click on the like button. That's all that we ask for when you attend this stream. I'm so glad to have all 200 of you here today. So I am done with my technical update. I will be going through the ticker symbols now. And remember to smash that like button, right? Great. All right, let's do this. Let's get it down. Remember, watch the podcast, watch the playlists that we have for you, watch the active investment playlist. And remember, next week, we will be live with the EGA mentorship program, right? Next Saturday, to be more precise, we will be launching the program on June 20th and 21st on optionswing.com. So make sure that you tune in. We will be going through a plethora of different things during the course. And how to sign up is going to be on my Instagram page, where I have this infographic up. So make sure that you go follow Everyday Growth Advisor on Instagram. It's down in the description if you want to go follow it. And also tune into the live stream every Monday, Wednesday, Friday, so that you're up to date with all the news. Okay, so just putting that out there right quick. Great. Alrighty, let's see what we have here. So let's get on with this and see what's going on. All right. Good morning. Good morning. Facebook 240 call 619. Facebook 240 call 619. Well, how is the market doing today, right? We're kind of consolidating here. We actually breached the 61.8 barely, and then we dipped back up. I think this was a bullish buying that occurred. Obviously, we can still see the market go down, but we'll see if it can break again. If not, we're going to see an extension to the upside. 240 by the end of this week is too fast and too high, my friend. You will want to get rid of that contract and sell it because you're not going to be able to make any money on it by Friday, okay? I doubt it. VIX 50 call 619. Now that one seems a little more probable, right? If the S&P 500 will continue selling off. $50 calls. This is, you are betting on a downside here on SPY. So this is a 50-50 play. It's going to be a coin flip. Your strike is a bit too high. You should have gone something like 45, would have been a bit more legible. If you have profits on that, take it and roll your contract over. Good morning. Okay, yo, APA. What is APA? Let's see. APA, Apache Corporation, $5 billion company. That's midway of what I would cover, but okay, fine. I'll go look at it. What is it at least? It's a company that does hydrocarbon exploration. Okay, so exploration of APA 717, $20 calls. Dude, it's looking like it might reverse, but so I see some volume coming in. Oh, let's look at the 1 hour. $20 calls are a bit too near, a bit too far, man. Your strike is too near and your strike price is too far. $20 is up here, bro. Come on. I mean, it could do that, but I think you should probably get rid of that and either roll it out or something. RIP my portfolio today. I hope that you didn't over buy stuff or didn't over put your money into something, because that's what someone who over allocates something in their portfolio says. Bank of America 2650. What is this? Calls. Bank of America 26. I'm guessing it's calls. And you said by Friday? No, absolutely not. See, okay, I'm gonna say it once right now, right? I see the same pattern, and so I'm gonna mention it for everybody's benefit. I see that you guys turn up to the live stream, and I see the types of contracts that you pick, and I'm trying to help you, okay? I'm really trying to help you by giving you some constructive feedback. So I hope that you don't take it negatively, because we all need to go through this learning curve. This is the reason why the EGA was set up. It's to help you guys so that you don't make these mistakes, okay? Now look, you have a 2650 call for a company, for Bank of America, right? Which is up here. Now, there is a chance that it could go up there. But will it? That's a different thing, right? Now, your expiry is too near. 19th means you have exactly 4 more days, and by Wednesday, if you are not in the money, by Thursday and Friday, those contracts will be dead, okay? Remember that theta drains you the most on a weekly contract on Wednesday, Thursday, and Friday. If you don't get rid of that contract on Wednesday, on Thursday and Friday, that contract is dead if it's not in the money, okay? Just putting it out there. So remember, you guys want to take these cheap contracts? Go ahead. But remember, playing the cheap contracts are going to be cheaper, but they're a lower chance of win rate, okay? So take the longer contract, 50 days out, 30 days out, and give yourself more time to hit the strikes. It will cost you more money, but it will be worth it. It's like, you know what you're doing. You're going to a dollar store and you're trying to buy a Ferrari. That's what you're trying to do here. Like, don't be doing that. It's not the right way to, I'm not saying it's not the right way. You're going for like a super low risk, high reward. Like, have you ever heard of something like that? It barely exists. So don't be hitting lottos because they're not going to work. Okay. You got to go with at least a realistic strike. Like the realistic strike to pick over here would have been something like $25, right? You pick 26.50. It's still within the range. But I'm just going off what this guy said and what this guy said, right? And then what you said. And I'm saying, okay, all three of you guys have too close of an expiry and your strikes are way too way too far. So just keep that in mind. Like, come on. All right, cool. Morning, Monday, Money Monday. Hell yeah. Good morning, good morning. Good morning, Jason. Good morning, Greg. How are you guys doing? Let's make some money. Hell yeah. Roku 120 called June 19. Once again with the June 19s. Goodness me. Let's see, Roku. Absolutely not. I don't think so. Unless you're expecting some crazy run up from Roku. It would need to break 116 first, which is the interim resistance right here, right? And you can see that. And if it does, then okay, right? So you need it to break this level here with good volume, right? It needs to have like good volume. And then OBV needs to be pointing up, right? You got a lot of things stacked against you, and you're saying that that's going to happen by the end of this week? Okay, buddy. I don't think so. But you're welcome to try. And so, if you don't hit 120 by Wednesday, remember that by Thursday and Friday, this contract is dead. Okay? So just keep that in mind. All right? Cool. KO, Coca-Cola, 49 calls for 626. All right, now we're getting a little further out with strikes. That's, thank God. Okay. Ooh, but your strike's a bit too far too. 49's up here, bro. Oh my goodness. I don't see the bullish case for this yet. I don't have a confirmation. I don't see the anything that will show me that Coca-Cola is going to make a strong rebound up to $49, right? No volume, no BV, no moving average, no nothing. I don't see it happening, unfortunately. Not by the end of this month. Coca-Cola, remember, it's a very slow mover, so keep that in mind. Boeing 710, okay, July 10th, 150 put. You're betting on Boeing to the downside again. Considering that Boeing has been on an uptrend, I don't know why you would bet onto the downside. I mean, I guess there's a good risk to reward here, which you could argue to say, right? Say we were to take the risk to reward for this case. Okay, so you're saying 150, which is here, right? And your entry is probably somewhere here, right? Okay, so let's just say your entry was here. This is your margin to profit, right? Well, your stop loss is going to be somewhere up here, right? Now, remember, if this is your stop loss, okay, and let's say your stop loss is $20, okay, and this represents your risk, then your reward has to be at least double, right? It has to be at least $40 because you want to have a risk to reward ratio of 1:2 at least, right? So 170 minus 40 is 138. Now you're aiming at 150. You need to be down here for your trade to be worthwhile. So your risk to reward ratio is not giving you a good trade. That's the way that I look at it, okay? Now betting on the upside instead, right? Look at the upside. Let's say you enter the trade here, you put your stop loss down here, right? Right below the support here, right? Right below the support, okay? Now you push your take profit up, right? And you say, okay, so my stop loss here is about 180 minus 160. Let's say that the stop loss is about $20, right? 180 minus 160, $20, right? And then we push our take profit to be double, which is 220, right? So 220 over here. Now, is this more realistic? Hell yeah, it's more realistic. You could definitely, there is a higher chance that Boeing will go up to hit this than for it to come all the way down to 138. Now, that's how I do my analysis, and this is how we are going to be continuing to do it. So, that's just my 2 cents, okay, on Boeing. So I went through Boeing extensively now. So if there are any more Boeings on the ticker symbols, then I've answered your questions, okay? Disney, Google, I'm not sure what you were asking about. Should I hold on to Amazon 3000 call August 21? Absolutely, if you wanted to. If you can suffer the drawdown period, I'm almost certain that Amazon will be at 2,800, 2,900 by that date. But it just depends on whether you have the stomach to hold it. So long-term calls for Amazon is a green light in my opinion. Welcome to the live stream, guys. I hope you guys are having a great Monday. Make sure that you click like and subscribe if you're here for the first time. We do this every Monday, Wednesday, Friday. This is a stream partnered with Option Swing, and we hope that you enjoy this as much as we enjoy making this. Since spending a lot of time working on these live streams, and it's finally paying off with people who enjoy these live streams. So welcome to the stream if you're new here, and we hope to see you on Wednesday, where we do this and break tickers down. We do an intro with some information that you may need. We break down the markets for you so you don't have to, okay? Great. Cool. J&J 160 call 619. Once again with the 619s. Let's see now. 160 call. Absolutely not. Your contract's dead. It's a very slow moving stock too. Remember, it's been consolidating so long over here, and now it broke below, and you have 160 calls which are way up above here. Yeah, those contracts, your contracts are dead. Either sell at a loss or do something about it. AXP 135.717. AXP 135.717. 135. Jeez, guys, come on. What is going on? Your strikes are way too far and your expiries are way too near. For a stock like American Express to move to 135 by July 17th, which is a month from now, it might be realistic to you, but if you look at how much it's moved in the entire month of May and June combined, well, this was with a market rally, right? You have to take into account that if we get any sideways movement, your contracts are dead, right? So your strikes are too far. This is too far of a strike, unfortunately. Sony 70 call 619 once again. Jeez. All right, 619 70. Okay, this one's a little more probable. Okay, this one's a little more probable. Okay, so I see the volume, right? I see the volume. I see the bounce on the kind of the zone here, right? Stock is consolidating above the resistance, right? Above the resistance, okay? And then I do see the moving average all fanning out beautifully, stacked one on top of each other. This is bullish, okay? So there is a chance that your contract should be good. Now, what was the expiry on the contract? Because I don't remember what expiry it was. 619, once again. Oh my goodness. If you are in profit of this contract, I recommend you to roll it out to further expiry, because I don't think that you will be able to hold on to the profits there. Okay, cool. Protect loss or hold DKNG 41 call 629. DKNG. I believe like somebody's asked me this question before. DKNG 629, 626. 626.41 calls. Oh, that's a tricky one. I mean, it's literally sitting in the middle, right? So it could go either here or either there. This is a flip, basically. Not much volume came into the stock. I would secure your profits if you have any. I would secure the profits. Can you walk us through selling a call or put on, for example, Ruby, which I own, on 619, and how to pick a proper strike price? Sure. Well, if you own Ruby, then you would be selling a call, right? So let's see what Ruby is. First of all, Rubicon project. What is this? Ugh. Oh boy. Less than $1 billion in market cap? Okay then. Online advertising technology firm. Well, selling a call on this would be simple, right? You pick a strike that it won't probably hit, right? So you could sell a $9 strike for this week and collect a premium on it. That's it. If you have 100 shares of Ruby, use that as a collateral, and that's called a covered call strategy, right? Covered call. You're using your shares as collateral, okay? And if Ruby goes up to hit $9, well, you don't want that to happen. But if it for some reason does, then what you'll do is at around $8, you'll close your contract out for half the premium, okay? And take the money. That way your shares get a cost average down, okay? So that's the idea. Selling a put is when you're waiting for something to come to the price that you want to buy it. Let's say you want to buy Ruby at $5. Well, sell a put at $5, wait for the stock to go down, the premiums increase, sell the contract, take the premiums, buy the shares with the lower cost basis, and then ride the price up and then sell calls. That's what we call the wheel strategy, which is famously played by Mike Boss on our channel, okay? So that's one way you can do it. Amazon calls, dude, come on. Amazon $3,000 calls for this week? Yeah, absolutely not, right? Mark, $4 calls expiring 619. Come on, you guys. Oh my goodness. What is this? What is this? What is Mark? What is Mark? Nope, absolutely not. Not going through it. It's less than 10 billion in market cap. Thoughts on Boeing? I already went through Boeing. Can you show me how do you set up your chart and what patterns are you looking at? Okay, great. Let's see. Okay, so I use a total of 4 indicators. The triple exponential moving average. I use a swing high support by Pattern Smart. If you go into the indicator list and you click and you type Pattern Smart, it is the one. Wait, it should be here. Yeah, it should be here. It's the one with the most likes. Swing high low support. That's the one. I use regular volume and OBV. Both of them can be found here. Volume, and you'll see both of them. On balance volume, it's literally from the built-in, and regular volume. And then this on the bottom is a stochastics, which is kind of like a RSI, but it has momentum inbuilt to it with the moving averages. So that's all I use. Now this triple moving average indicator is not available on TradingView. I actually have a script for it. So you can use any other triple exponential moving averages, or just use exponential moving averages and have 3 of them. I use a 50, 150, and 200 moving average, which is the blue is the 50, the green is the 150, and the red is 200 moving average. So I hope that kind of answers your question. Okay, great. Microsoft 185, July 31st, 11:19. Seems okay to me. Microsoft should be okay. Thoughts on VIX puts? Not a bad play if we have a retracement, but it would be a day trade. It would only be a day trade if the market rallies. Morning bro, Oracle 50 put 626. ORCL 50 put, let's see, 626. Oh yeah, absolutely. Looks good. Looks good. Yeah, I like this one. Just be careful with the kind of a rally upward, right? You might see a rally up to test this over here. I would enter here, right? I wouldn't enter here because the premiums are going to be super juiced up, right? You can enter up here and then take those. Good trade there. Disney 619, 117. Disney 619, 117. 117, 619. Oh, man. I don't think so, but maybe possible if some bullish news comes out, just saying. But I don't think so. I see the moving average coming down, stocks making lower lows, right? We're in a downtrend, right? Moving average is going to converge here. This will be a death cross on the 1 hour, right? That's technical wise. Now, I know that Disney's opening up its parks soon though, so that may be the bullish Hail Mary that you need. Like button smash, thank you very much for doing that, appreciate that. All right, cool. Let me go through these and see if there are some other questions apart from the tickers, because I will come back to the tickers in a bit. UUP, this is what I'll come back to. Let's support each other. Absolutely. Dope music? Hell yeah. Yeah. Sure. Hit me up on Instagram at Everyday Growth Advisor, and we'll see if we can get some of your beats on here. Cool. Can we buy TLT as a hedge? Yes, you can, but make sure that you don't buy them right off when the market opens, because the premiums are going to be super high. How do you hedge? You said hedge. Hedging means you take a opposing trade to your main portfolio direction. You take puts on all your calls. Like for example, you take puts on SPY, or you take calls on UVXY, which is betting on fear. Okay, that's exactly what this guy said. Cool. Okay, let's look at other stuff that people are saying. What is your favorite long term to get into right now and why? Personally, I love Microsoft, Amazon, and Facebook. Tesla as well, but Tesla's super expensive. Microsoft and Amazon and Facebook are all three undervalued intrinsically. So their stock values are actually worth much higher than what it is actually. So that's the reason why I like those three companies. And I know this because I've done the intrinsic value calculation myself. So if you actually go back and you look at my YouTube video on a fundamental analysis on Facebook, you'll see I did one like on, I want to say on here, this one, right? This video was on February 7th, right? And I had said that Facebook would be worth about $230, $240, like you can see it right here. Let me just scroll through real quick. So, oh wait, I gotta go to the second part. So that was the intrinsic value calculation that I was doing based on
Facebook's.
So fair value of Facebook was 221 based on the discounted cash flow model that I was doing. And you can see that Facebook rallied all up to it, right? So we're officially where it was. And Facebook was trading at 210 at that time.
110.
Okay. So that's just a quick idea of how you can do those valuations. You want to know how it's done? Go watch that video. Just watch that video. You'll understand what I did and how I got there. Anywhere else we can find the details on the program besides Instagram? What other way would you like me to put it on? I mean, I'm not really sure. It's on Option Swing if you're a part of Option Swing. Other than that, it's on Instagram. There's no other way that I can, get it to you. By the way, if you're here, smash the like button, guys. Let's see if we can get to 120. I really hope we can in the next 13 minutes or so. So smash the like button, and I hope that you guys are enjoying the stream so far. All right, let's see. Gonna not do the tickers for a second and come back to the tickers. If you are day trading, should your expiry be 60? No, absolutely not. If you're day trading, that's a different scenario, right? Day trades, you could take weekly contracts or the week after contracts. It depends on which day of the week you're trading, right? If you're trading on this week, then you can take weekly contracts on Monday and Tuesday. When it hits Wednesday, right, I highly recommend taking the next week's contracts. Why? Because theta burns you the most on Thursday and Friday, right? Wednesday, Thursday, Friday are the highest theta burn. So what you want to do is if you're day trading, on Monday and Tuesday, you can buy this week contract, 19th, right? Then if you are on Wednesday, or if you're planning day trade on Wednesday, Thursday, or Friday, take the contracts for the next week, expiring 26th of February. 26th of June. Okay, I hope that makes sense. Cool. First time on the stream, appreciate the help there. You're welcome, man. Welcome to the stream. We do this every Monday, Wednesday, Friday. Make sure you smash that like button, guys. Come on, that's the only thing I ask for. Come on, I'm sure you can do it. Cool. All right. Any put suggestion? Okay. Any put suggestions for today? I don't have any suggestions, man. This stream is not for suggestions. This stream is to help you guys understand how I break things down, breakdown of the market. I help you out with the tickers that you have. But I'm not going to give suggestions. If you want suggestions, that's what Option Swing is for. This is a community with almost 1,400 traders where we have professional traders calling out trades every day. We have an educational chat that I'm a leader of, and then we're going to have our EGA mentorship course, which is the Everyday Growth Advisors mentorship course, starting on the 22nd of June. And I hope that I will see you guys there, okay? So make sure that you turn up for the mentorship, because if you need to learn how to trade these markets and you want to know my methods, you want to know how I do it, then subscribe for the mentorship program, which registration will open up on the 20th and the 21st on optionswing.com. So optionswing.com, and on the 20th and 21st, it's not live now, but on 20th and 21st, under the products page, right, you will see it over here. When you click join now, it's going to bring you to the page where the plan will be on the bottom here, okay? So it's not live now, but it will be live on the 20th and the 21st, all right? Cool. All right, let's go back to this. Ticker breakdowns. Let's see. No other questions? Great. All right. UUP is where I was. UUP. UUP. What ticker is that? Invesco DB Energy. Huh. What is this? I have no idea what this is, but it's got a too low of a market cap, man. Whatever it is, you're playing with fire, bro. You're playing with fire here. I don't recommend it. Nope, absolutely not. Let's support each other. Yeah, man. So I was telling you, go hit me up on Instagram and we'll talk further about the music. Okay. Let's see. How do you hedge? Okay, Moderna 6650, 619. Again with the 619s. Jeez. Okay, actually this one's not that bad. Sorry guys. Okay, Moderna's at 6550. Your calls are probably going to be close to the money, so I would take your profits and run once you can. Your expiry is way too soon, so take the profits and run. D-Dog, $80 call, 619. D-Dog, I like saying D-Dog. Data Dog. Ooh, I like this one. Amazing. $80 call. Seems probable that you'll hit it. However, your expiry is super near, so be extremely careful. This is one of those contracts where you think can really win, and then it kind of does a sideways movement and you die. So the moment you're in profit, take your profits and roll it out to a further expiry. Your expiry is too near. Boeing, I went through Boeing already. Morning, VIX, 48 call, 619. I went through VIX already. Let's see. XLU, $60 call, 619. What is XLU? It's a ETF for utilities. Yeah, you know what? Utility sector, maybe. That's a defensive sector. $60 calls. No, $60 calls? Maybe. This can be tricky, man. I do see some volume coming in, but not enough to push this up. And your expiry is 619. It's tricky. UAL 45 call, 619. Once again with the 619s. You guys love your weekly contracts, huh? It's when you start getting burnt, that's when you're going to learn your lesson. So I'm not even going to say anything. I'm just going to tell you, if you have a weekly contract, then, until unless you're already in the money, I say, it's going to be really difficult for you to get that kind of a thing going. 45 calls, absolutely not, right? You can see your strike is way too high. It could go up there, but by Friday to go up $9, it might be a little bit of a squeeze. Now, and remember, it's not about you reaching 45 by Friday. It's about you reaching remotely close to 45 by Wednesday, so that your contracts don't die on Thursday and Friday. Remember, the theta burns you the most on Thursday and Friday, okay? What is your suggested strike for UVXY? I do not give suggestions here, unfortunately. I would be happy to give you happy for other people to give you suggestions on option swing if you join the community. This stream does not provide suggestions because of some legalities, okay? So I will not call out plays here. I'm just helping you validate yours. If you have one and you want to hear my opinion on it, sure, I'll give you my opinion, but I'm not calling out trades on this platform, okay? If you want to play called out trades from me, join option swing. That's where I call out trades from time to time, okay? Cool. Square 8250 call 717, and then square 100 call 717. Jeez. Yeah, I would think so. Continue holding this, right? Nice bounce on the moving average here. I would continue holding it. I don't see a reason not to. I've been holding BP 35 calls 10. 16. Well, if you watch my stream, you would know I'm bearish on... Oh, wait a minute. Yeah, that contract's dead, man. Oh, wait, 10.16. Ugh. Yeah, it's gonna be tough. You're gonna have to hold it for a long time, man. I already explained multiple times that oil is bearish, so... Rookie question, how are you seeing volume? There are two ways you see volume. The first is by the volume bars on the bottom, and this doesn't tell you what volume is actually being traded. The green doesn't actually mean that it's bullish or bearish. It just takes on the color of the candlestick above it. That's the reason why I use this blue streaking line, which is called the on balance volume, and this tells me whether volume is flowing in, out. This is out, this is in, right? And you can see the volume for the on balance volume scale is over here. All right, let's see. Any other questions here? Waiting to make your like count 100. Thank you. Yo, come on, 4 more people. I'm sure we can do at least 4 more likes. Come on, guys. Have you decided what time you will run the mentorship program? Yes, I have probably decided because it's going to be, it was voted on by our community. I think the time is going to be 6 p.m. PST, which is 9 p.m. ET. So it's 9 p.m. Eastern time. That's the time of the course it's going to be run. If you can't attend it, don't worry. They're recorded sessions, so you can go review it at any time that you like. Okay. Let's see. Okay. All right. So let's see what is left over here. XRT $39 put 619. XRT, that's another ETF, right? Retail $39 puts for 619. I see your point, but there has been some volume coming in. You can see that, right? There may be a bounce here. It has bounced over here before. Strong support there. But it may continue to be bearish too. So this is a tricky one. I would personally get rid of that contract and roll it out if you're really bearish, but only be bearish if it breaks and stays below this $40 level. Any Starbucks short calls today? I don't know, man. You tell me. Boeing 300 call 1112. Yep, that seems okay. I have the same one. Apple 390 call 710. The Apple and the Amazon are two short expiries. The Boeing one is fine. You might want to roll it out. Amazon 2,700 619. Too close of an expiry in my opinion. Should I make a call for HNR $19 619? HNR block. HRB? I think you meant HRB, right? $19 calls. Yeah, I think it's looking good, in my opinion. Nice bounce over here. It's been using this bounce, right? This obviously was a test abnormally, right? Looks okay. Wait, let's see. What is your strike again? Was it within a reasonable time? 619. Nope. Don't be taking the weekly contracts on that. If you're in profit for some reason, roll it out to further expiry. Come on. Oracle, I went through Oracle already. AMD, MSI, first time in stream. You're welcome. Appreciate it. Okay. Shopify sold 680 put. Awesome. Hold it. Hold that one. Dude, that was just some bullish news today. This is like crazy news, right? Shopify's partnering in Walmart. So you're going to see some ring-a-ding-a-ling. By the way, if you guys are here for the first time into the stream, welcome into the Everyday Growth Advisors live stream. We do this every Monday, Wednesday, Friday. If you missed the first half of the stream, don't worry. The replay will be up in about an hour or two. You can go watch the replay. We do this and we break down the market for you so you don't have to. I am going to go ahead and end the stream here today because we just have too many tickers to handle. If you have any questions that you would like me to cover, make sure that you turn up early and put it up when we are here early. That way I can go through them and I won't miss yours. Make sure that you leave a like for this stream. I really do appreciate your time being here. and have a great trading day. We will be back on Wednesday with another stream, and we will cover the market as it goes. Remember to watch the educational videos that I have prepared for you guys in my stream, in my YouTube channel. And remember to follow me on Instagram at Everyday Growth Advisor. Have a great day, guys. Godspeed and peace. If we can get to 120 likes, come on, guys. I'm sure 7 people. Come on. Just click the like button. Come on, guys. All right, bye.